Very warm welcome to our viewers and in particular our guest, Mr. DK Agarwal, who is Indorama Ventures Deputy Group CEO. Welcome, sir.
Thank you, Stuart, for having me.
Now, once again, we're here today because Indorama Ventures reports its third quarter result for the financial year 2024. Mr. Agarwal, if I have a look at the top line highlights, it's showing a robust recovery in quarterly earnings with Adjusted EBITDA rising 32% compared to the same period a year ago. In fact, it's the first year-on-year improvement for the year. What's driving it?
We are very pleased with our the third quarter result. We certainly see market recovery. It's a period of prolonged destocking, which has been, last 9 quarters the industry has been suffering from. Although the volumes are flat, but our rationalization of assets is really paying dividends. We took aggressive decisions to rationalize some high-cost assets. That is paying, $19 million of earnings have been achieved in the third quarter just because of fixed cost reduction. And we expect this to be around $160 million by 2025 as, the assets were shut down during different periods. A lot of steps is still being taken. I would say that right now we have just completed in CPET and Indonesia. We shut down the Australian assets in Indonesia because of issue of ethylene. Fiber is still working on it. A lot of work going on in the fiber side. We see a number of restructuring happening, which will save nearly $20 million by removing the layers of management, more efficiency to be added. And I see it's a good point of inflection, particularly because 70% of our products are serving daily necessities. Chinese have been suffering losses for a long period, and now the integrated margins, earlier the refining was subsidizing the downstream like PET and fiber, and we could see now PET and fiber margins improving. So, looks reasonably good.
Now, you just mentioned there the margins, that's the industry benchmark spreads, of course, and also our own volumes. Are these early signals of a more broad, sustained recovery, or is it still going to be somewhat scratchy as we move into the next year?
It's too early to say. Naturally, we saw in fiber improving from $95 to $180. PET, we saw improvement from $70 to $100 nearly. The industry average has been last for 130 years, but we knew that this is not going to, such low margins are not going to sustain for a long period of time. But having said that, there is still a hangover of the capacity in China because China has built huge capacity. Our geographical footprint is paying the dividend because naturally there are more duties, there are protections happening. Mexico recently increased duties to 30%. So all these are happening in the world. We continue to remain focused on our business model. We are not embarking that there should be a significant increase. We will keep working on our cost reduction, management action. I'm very happy that digitalization journey is moving on track. SAP is stabilized. We are working to now reap the benefit of this in indirect procurement, sales excellence and all that. And we have also done significant management restructuring to have a focused management.
Now, these transformational programs that you've talked about and initiatives such as IVL 2.0 we've spoken about in this show, are they starting to show up in the results, notably this quarter?
We just had a $19 million saving in this quarter, so too early. But all the actions have been done, and I'm very happy that those actions have been done timely. Although it is very sad that we have to shut down these plants and we lost some of our colleagues. But for the larger group, it was necessary to get into the first quartile cost production, which we are getting there now. Fiber we still have to do. So I feel confident that what we have rolled out in Capital Market Day, all those objectives will be achieved. We are deleveraging, not that significantly yet, but as you know, we are preparing for 2 major IPOs, one for Indonesia and another for our packaging unit in Indovida, and also some divestment. Our net debt operating date over EBITDA, if you annualize for third quarter, it's becoming 3.5, which is quite an encouraging sign. Management is deeply focused on those initiatives.
Now, we're already into the fourth quarter, of course, so is it still a little bit too early to talk about our full year results and expectations for that, and of course going forward into the next year?
Yeah, it will be too early, but fourth quarter is normally seasonally a weak quarter. But I think it clearly gives some signals for 25. We see US elections behind us, which may have some impact on our business. I see, as you know, the new administration is likely to impose more duties on China as well as on other countries. Now, remember, 1 million ton of PET comes from remaining parts of the world, and if duties happen, then import parity increases. Same happens for other products like fiber and others. So we are carefully watching. There may be corporate tax reduction. If that happens, then naturally that will benefit the bottom line of IVL. The only thing is climate initiatives probably will take a backstage because of the Paris Climate Treaty. So we have to watch. It's too early to say. Interest rates may not cut as we thought because there is going to be a issue between Fed and new management, that new administration, that what exactly is driving to. So we have to watch and see that. Very exciting time.
Well, I wish you well, Mr. Agarwal, as we head into this final lap for the year, and we'll see you back here again in another 3 months.
Thank you, Stuart. Thank you very much.